Hello everyone. Hope all of you are doing great. And today's our topic for discussion is IPO analysis. So we'll be learning certain pointers about how to select an IPO, how to what pointers to look onto when an IPO is coming to a market. Okay. So let's try to deep dive into the factors and get on to the analyzing the IPO. So this is a standard disclaimer. So now we are on a site which by name chittorgarh.com. Okay, this is a very famous site, chittorgarh.com. Uh, with the help of this, we will try to analyze the IPO which is getting launched. Okay, getting subscribed or getting launched. Basically, Chittorgarh is a site, very famous site. This gives a lot of information about IPOs. This is a dedicated site. This site is dedicatedly available for IPOs which are coming up, and it gives a lot of information as such. Okay, very important information. All the information it gives, as you can see on the screen, uh, it has a lot of information which is available. It's a very beautifully designed site, and it gives a lot of information including every aspects. It is covered very nicely in this. So let's try to analyze. Okay, let's try to analyze one of the IPO which is coming up. Again, let me make it clear that this is not a recommendation for this IPO or any IPOs as such which is being discussed. I may name some in between in case of during our discussion. This is not a recommendation for any of such kind of IPOs or any stocks. It is only a learning so that we can apply these things when a new IPOs are coming up as such. I seldom apply for IPOs based on if I'm very much interested and on some particular IPO. Only that case I look into. But anyways, this particular site gives us a lot of information as you can see here. There are a lot of tabs available on top. IPO and SME IPO, broker reviews, and a lot of things. Okay, details. This has you can see as you go on to this here. There are a lot of things available here. Mainboard IPO, which is upcoming IPO. What is the upcoming IPOs? All other lot of things, as you can see one by one here. Lot of pointers it is covering. In a similar way, when it comes to SME IPO, this also has a lot of pointers which covers, and this particularly deals about the SME IPOs, which this particular tab deals and gives you information about the SME IPOs which are coming up during the course of time. And the next tab would be a kind of it's a broker report. Generally, there are a lot of broker reports available on such kind of this site actually, but generally I would not recommend you to go ahead with the broker reports. Sometimes it might be slightly biased because of might be a nature that those brokers are sometimes fund managers of this particular IPOs. So you can have your own pointers and try to get into and check on what is more suits to your way of thinking. And secondly, this particular, as I was mentioning, this site which gives you a lot of information might be these people. I mean, naturally, the website has to run. These people might be earning from this whatever the ads which is coming and all those things, and maybe some broker reports available. But anyway, for our fundamental, I mean, our study purpose, this gives you lots of pointers for us. So let's try to dissect one by one and try to analyze and see how we can make use of this site. Now today I just opened here one IPO by name Mangal Electrical Industries Limited. This one. So here, as we can see here. Okay, now before we could jump on to the thing, what is, I mean, go into this. Mangal Electrical Industries IPO in detail. Let us try to identify what do you mean by IPO. Now, IPO is initial public offering. Now, what it means actually is, let's assume a company initially is a private entity. It is managed by private people, and now because for it wants to accumulate more capital, then it goes for a public. The public offering it wants to go and get into a listing. So and to get into the stock exchange, it initially it gives comes up with the initial public offering. So that is the process. So naturally, from private to keep going for a public. Now there are two ways basically to understand what is the way of this. One is as you can see here. If you go down here, if it is mentioned here somewhere, it is mentioned. Let me just come to that. So here you can see fresh capital is mentioned. So in IPOs, basically there are two things. One is fresh capital, and second is OFS. Now, what is fresh capital? And the difference between, let's try to identify what is the difference between the fresh capital and the OFS. Now, fresh capital is a scenario where you know the promoter wants to collect, I mean, raise more funds, and maybe the whatever the portion of his shares available, he tries to release to a market, or might be a new shares are created in terms of to move on to the market. New shares are created, and maybe then his liability goes to 75%, and the 25% of the 25 portion of the entire this one is available for the public. So that could be one scenario where if they want to, the promoter wants to raise more funds for the future growth, or to manage the working capital, whatever their objectives of the company they have planned. So he wants to raise more funds so that for the next during the he can use it during the next course of action. So second point would be that is the OFS. Okay, offer for sale. Now, what is the offer for sale? The offer for sale is, let's assume, I mean, there are some private funds which is there. I mean, the part of the thing. Some VCs, venture capitalist, we say, and some strategic funds, people who would have entered in a very early stage of company, and they want to book a profit. Okay, when they want to book a profit, that the offer for sale, it will be coming as the offer for sale. So in any case, these are the two differences. So one is the fresh capital, and the second is the OFS. Okay, I think this particular terminology is clear for us now. And now coming to the, let's try to understand one by one. Now here, as we can see here, very clearly it mentions here, no, open for subscription on August 20th, it mentions here, as you can see. And it will be available till August 22nd, it is giving here, okay. 20 August 22nd, 2025 is mentioning by the, it's mentioned in the website. So generally it is here open for some almost 3 days. So as any new IPO comes, it is generally it is a system where that maybe as per the SEBI, it is between 3 to 10 days. It can minimum have a 3 days window, between 3 days to 10 days. The IPO is open, the which will be decided at the point time of IPO getting released. And the next is that it is available for public on to apply for a subscribe for a, or apply for IPO between say 10 a.m. to 5 p.m. on all the days. All the days when there is a, I mean, whenever the stock market, except the stock market holidays. Okay, so all the other days it is available between 10 a.m. to 5 p.m. Okay, this is one factor basically. So here it is mentioned almost 3 days. And the second and important thing will be here, as you can come down here, it says that there's a price band given here, the IPO, that is 533 to 561 rupees, it mentions here. So basically there will be generally one lot, we say that just in IPOs we say is a one lot of IPO. One lot is generally between 13 to 15,000 rupees is the one lot. Okay, one lot says is 13 to 15,000 rupees, and it gets so the share value gets adjusted with that. So number of stock, like in this case now is here it is mentioning 13,000 like as you can see, 13,580 858 is a mention getting mentioned here, in which 26 shares, 26 it forms with the 26 shares. In each lot, 26 shares will come, and that is a lot size. Okay, one lot size. So the price band is between 532 and 561. Now here what happens is, in the 533 we call it as a lower price band, and 561 we call it as a upper price band. And generally what happens is, I don't know, this price is generally mentioned, but what generally most of the times happens is, the stock, like this IPO gets listed onto the stock exchange on the higher price only. Okay, until unless it is not subscribed fully, only then price discovery will happen. If it is subscribed less, means if not fully subscribed, then the price discovery might happen sometime. But most of the things, as we see, it always gets listed onto the stock exchange on the higher price band itself. Okay, this is one factor, basically, which we can will come to know. So number of shares stocks is given is so much, and which amounts to so and so price they have given. And they are also mentioning here about SNI and SNI, that is the SNIH. This is also called as SHNI, and BHNI also it is called as, which we'll see now as we proceed. For a retail investor, it is almost a window of up to 2 lakhs. Generally, it is between what is mentioned is mentioned the minimum lot size is 13,000. So between 13 15,000 to up to 2 lakhs is a retail investors window. And BHNI stands for big high net worth individual. HNI stands for high net worth individual. B stands for big. So big high net worth individual, small high net worth individual. This is the factor generally which is used. Whereas small HNI is between 2 lakhs and 10 lakhs. The lot size is between 2 lakhs and 10 lakhs. Generally, it is up to 10 lakhs. This one can, and within it will be within this band. And for a big HNI, it is a 10 lakhs, because slightly above 10 lakhs it will be. The number of stock when the lot size will be slightly above 10 lakhs, which I will see now anyway. As such, we go, we'll be able to see there. We can see here as we go down, we'll be able to see that. Uh, See here, it is mentioned here. Okay, so it's mentioned here that it is so much. Okay, so now retail investors, as we can mention here, 14,000 is a 20. Sorry, here it is mentioned as, okay, this is the minimum investment what it is mentioning. So what happens here is that considering the thing here, it is giving here as 26 shares as 14,586 to 189, 1,89,586.18. And the small HNI stands between this minimum and maximum. And here big HNI is 10 lakhs plus, slightly above the 10 lakhs. So this is the category. So these are the three categories. This is one category, this is second category, and this is a third category. Okay. The third category is mentioned. Third category is mentioned. Okay. And now coming to this, use some more things, like it, see here you can mention total issue size is so many shares is available, that is 71 lakh 30,000 and odd shares are available, which they want to collect around 400 crore rupees. Okay, that they want to accumulate 400 crores during this one. And the stock price face value is 10 rupees, and this price band is 533 to 561 rupees. So this is the basic information as such which is available as we start with the analyzing. Okay, so lot size is clear now, and what is the stock available for BHNI and SHNI is also we try to analyze, we try to identify. And the next point would be to, as we go ahead, in a stock, which one is that, see here, as we come down, it will have a lot of information regarding the company also. You can click on read more here, and it gives you a lot of information. The products portfolio, what is the moat of a company. In short, they would have mentioned here. Okay, what is the product portfolio? It is mentioning a CRGO, white coil, CRGO, slit coil. So different product line has been mentioned, and a competitive strengths. We call it in stock market. We call it as a moat or a competitive advantage. We call it as which is a competitive strength. Okay, so a couple of things are notified here by the company. And as you can see here, um, As you can see here, it is a lot of things here. When we come down here, the most we reach to a most important thing. Okay, that is called as DRHP. It is called as draft red herring prospectus, and there is a below one more column which is called as RHP. Now, what is DRHP? DRHP, if you, it's something like, it is a detail of all the details which is provided about a company. It's a kind of prospectus, we say. You might be knowing in college when you go, or when you go for some admission, they give a prospectus which details explains about the college. Similarly, this DRHP is uh, they in a company gives to SEBI much advance in advance before going for IPO, which has all the informations, detailed information about all the things. This is a very, very, as you can see here, this is about 450 pages document it is. Okay, as we can see in this particular lot, it is 1 to 450. It is the 450 pages document which has a lot of information. You can find out a lot of information about this. And one important thing to identify where is that table of contents. It is pretty much, see, DRHP. One thing is that we need to identify is that DRHP is a standard format most of the times. Most of the times it is a standard format where it comes with the table of contents in similar way. Okay, this is a format which generally applicable for any company which comes out with a thing. And the difference between the DRHP and RHP is that DRHP comes much in advance before the IPO, and the RHP comes during the IPO. Okay, because sometimes it takes some period of to create that IPO. It takes some time. So the latest updates are available in RHP. But anyway, DRHP is a very, very important document which comes up with a lot of details about the company. And it generally takes about, if you want to analyze this, you could generally takes about say almost roughly around 4 5 hours approximately. You can always download this and go through by detail about this, and it takes about 4 to 5 hours of time to analyze this particular thing. Okay, and thing is, you can see in this particular thing, it has a lot of sections here. One is a general section, and second is a definition and abbreviations, and means abbreviation, all these terminologies which is used. And coming back to a thing here, it is also mentioning a risk factors and the introduction of a company. Risk factors, all the risk factors which company feels it is already, they would have already noted in this. And there are some introduction portion about all the different things here. And as we can still come down here, our business they are mentioning, industry overview they are giving, and lot of things like that. Financial information also it is forming in the next section. And the other section, as we go ahead here in the down, legal and other information. Legal in the sense, there may be some case against company or the promoter, whatever it is. All those legal and informations are updated in this particular thing. Now the terms of use, all the things, all these things are also standard terminology is also is mentioned here. One can download this and go through this and make use of things. Of course, now currently nowadays you can also use the chat GPT for these things. You can download and upload in chat GPT and ask the questions which you want to ask. Maybe you can type in the prompt and try to find out the growth for 3 to 5 years, financial details, whatever you want to check onto, you can always do that. Even manually also it can be done. Just a matter of time. It takes time if one wants to do it manually. That is one point. And coming back to this thing, so DRHP, one important things to in this one to identify is here is that in this table is, so one important thing to note in DRHP as you proceed here is that basically the we have to find one section by name. Here you can see here objects for the issue. Okay, objects for the issue, that is nothing but what is the reason why company wants to raise the funds. Basically, company is raising the fund, what is that it is going to be used on to, what it is intending planning to use it into. Okay, whatever the projects or working capital, whatever it is all given in this particular column in detail. It would have been mentioned here. So you can just have a this one and glance and see. I try to identify why company basically wants to get, releasing the IPO. That is also a part of the thing. Now coming back to this particular thing, so the DRHP portion, we understand broadly now, which you can go through and collect a lot of detailed information about the company. Now, here again coming back to the top here, the one point which need to be identified by us is before applying to, I mean, as we apply to IPO, the people say, okay, we have to apply on the first day, we have to apply on the second day, this time, that, this, people say that. But basically, because the allotment chances are more. If you apply on the first day, the allotment chances are more. If you're on the last day, allotment chances are more, all that. But generally it is all no, doesn't make any much sense, because all this happens on the draw basis, lucky draw basis. So it has, SEBI wants has a, stringent norms for that. And here if you see here, one good thing is that, as you can shares offered, no, out of that, retail shares offers is 35%, it says. So generally the percentage of shares is maintained. If the 100% out of 100% available there, so 35% is reserved for retail category. So generally it's one good thing is that it increases the probability of at least retail investor getting at least one lot. No, again, most of the times what happens, it is generally it is over subscribed. And many of the times, as you will come to know, as now, since it is still not date of this one is because still the just the IPO is still open on the first day, so it is not yet mentioned here what is the number of times it is subscribed. As we proceed, maybe this one, it is generally, it will be like, three times subscribe, over subscribe, five times, 10 times over subscribe. It shows the interest of the people, and number of shares, number of people who have shown the interest in this particular IPO. So what happens generally in, like, during the lucky draw, the whatever generally one lot gets allotted to the people. Again, it's a probability. It's no that not that everyone will apply and everyone will get whoever is applied. It's just a matter of probability, and generally one lots get issued to the wherever the whatever the whoever gets selected in the lucky draw. Okay, and that is one process here. And coming back to the further number of other points which we want to look into is that that anchor investors. There is a term by called as anchor investors, as you can see on the screen here. What do you mean by anchor investors? Anchor investor is a term. These people are getting into the company and commit certain amount of shares before even the IPO comes to market. Okay, now, so anchor investor, these people are called as. And as you can see, you can, if you click here on the Mangal Electricals IPO anchor investors list, we can identify the number of people who are on to this particular IPO. I mean, who are on to who are shown the interest into this particular IPO and forms a part of this particular IPO. So you can mention here Abacus Diversified Alpha Fund, LC Faros Multi Strategy Fund, and so on. So many people are there which they have shown the interest here. And as the list goes here, and the amount of shares and stocks, whatever amount of shares what they have no they have taken up, that is also mentioned here. Now, one important thing for us to note here is that in this as we, like, as you can see, anchor this anchor investors portion, it is mentioning there that now these people, even though these people are entered much before IPO. Okay, let's assume that here they have given tentative date of the listing is 28th August 28th. Okay, so the soon after the, no, it's there's no soon after that doesn't mean that these people, the moment it gets uh, listed onto the stock exchange, these people cannot take an exit. The lock-in period is already mentioned here. The 30 days, these people can, 50% in 30 days it's mentioning. So by the lock-in period is already mentioned here. These people can only sell the stock up to 50% of theirs, this one, in 30 days, after 13 days on this date, particular date. And after this particular date, they can remaining, they can do it in 90 days is mentioning. That means that whether the price of the stock when it's listed goes up or down, these people cannot sell it. And there is no guarantee that uh, always the price goes high only, but in the stock market, as you all know, there's no 100% guarantee that we can't say that 100% it will always on the profitable side. It can be even sometimes discounted also. It can get released in a discounted side also. That's a negative side of that. And so that probability always there, so these people from a very important thing. And generally what happens is, this gives you an idea, as I was mentioning here. This gives you an idea, who are all the people who are shown the interest in this particular IPO. And you broadly get an idea based on the people who have interest, shown interest. You get an idea, okay, these are all the people who are shown the interest. Again, it can give you only some cushion of making decision to buy or not. There is no 100% that, okay, if or big people or such people are there, that doesn't mean that it will always be a profitable IPO. There's no a thing like that. But anyway, it gives you a cushion or comfort, saying that okay, this can be a factor where these are the people who are all shown the interest. Maybe we can consider the while taking a decision to buy the go for the subscription. That is one point which will give us some cushion there. Okay. Now, next point would be, as we go on here, is that uh, the anchor investor portion we understood now. Okay, what it gives us a bit of idea about a thing uh, while making the decision of going for a IPO. And the next, I mean, getting applying for a IPO. Okay. Now, one more terminology which we want to identify, note is the GMP. Okay, here you can see in this particular site, GMP, it is mentioned here, IPO GMP. Now, what is GMP? Now, GMP is, gray market premium. Okay. Now, what is gray market premium? Let's first try to identify, Now, gray market premium is something, let's assume a scenario. I have an account, Demat account, a PAN card in a Demat account I have, and I am not ready to, I am not interested to take an exposure on this particular IPO. In such case, let's assume from my friend and one Vikas. Let's say assume that a Vikas is there, and Vikas wants to take the exposure. He don't have an extra account, and he wants to take an exposure. Okay. Uh, of course, let me, before even that, I just want to add one more point here, is that in case you want to, if I am applying, if I am having an account and if I want to apply, let's assume that the scenario where I have three accounts on my PAN card. I have one in Zerodha, I have a ICICI, and one more what I have is I am having in Angel One also. Let's assume I have three accounts. One I have kept for long term, one I have kept for short term, and one for maybe swing trading. All that I have just for some bifurcation I have made. And you try to apply this IPO from all three places. All three will get rejected, because if you are applying from a same PAN card from a different thing, at the end of the day, system can analyze that it has come from the same PAN card and it will get rejected. Secondly, another way around is that if you have a PAN card, means Demat account for your wife or maybe mother, you can definitely apply from the different PAN cards. So it increases your probability of getting at least a lot. If not in three, at least one, you might be lucky to get that. Okay, get a one lot at least in one of the accounts at least. So coming back to now, our Vikas. So now Vikas says that, okay, Vikas he doesn't have an extra account. He takes my, he wants to utilize my account available, and I would say, okay, Vikas, whatever is the case, I would require 100 rupees. No, whether it goes higher on the after listing or not, or higher, or maybe it comes lower, I would require 100 rupees per, shares. Okay, so that deal happens, and then what happens? So I would be only, my what we can say is, so that particular amount will comes to me as the, whether it is goes higher or lower, I would not be directly connected with that particular thing. I mean, this coming to this GNP here, as you can see here, the 561 is IPO price, and subscription, it shows here so and so on this particular date it is so much subscribed, 2x 2.08 subscription, it is it's mentioning here. And it shows that 34 rupees is a GMP, means each stock 34 rupees people are additionally willing to pay, and which 884 rupees it falls because there's some 26 shares or something it was mentioned in earlier slide, as we were seeing. So for that particular thing, 884 rupees is the estimated profit per lot of, one each lot. 884 is the estimated profit. Of course, most of the times though these things are manipulated, it just gives you an idea of, uh, uh, about people, whether what is the general scenario, whether it's positive or negative, all that gives you an information. But I would definitely not advise of getting into these things in detail, but you can just have a look so that you can get an idea of what is the broad purview of the thing. So this can give you an idea about people, about interest, about the people's interest in this particular stock. So GMP is one of the important terminology. I mean, generally you can just have a look onto that also for a better understanding of the thing. So I think almost most of the points we have covered over there, as far as new IPO things are as far as new IPO is concerned. Hope this video was useful for all of you, and thank you very much for joining me on this. Thank you.